Good morning, everybody. How are you? And good morning to those of you who are visiting us on internet and joining us for today's class, which will be primarily focused on creating shared value strategies, which is the follow-up of Michael Porter's work for many, many years on strategy. As we do every day when we have class, I'll start off by doing a recap on what we really addressed during last week's class. And then we will be diving straight into the whole concept of creating shared value and what does that actually mean for the future of business. You will get the chance to ask yourself those same questions in your breakout project teams after the break and actually come back to the group and really illustrate whether you think there's an opportunity to create shared value in society with what you're really developing in your business. Okay, I've left 10 minutes for questions. As we discussed last week, what we're going to be actually doing is an exam next Monday, so you will have the opportunity to actually ask any questions you have in terms of the material we covered during the entire module. Okay? So just in terms of recap, we really covered and really discussed the GSK case last week, and moreover we really tried to understand and identify what are the potential elements we need to take into account when we're actually formulating and implementing and executing our strategies in order for them not to fail. So I'm going to ask you now, what are some of those elements we actually discussed last week?
Mm-hmm. Well, sometimes it's about execution. Maybe you have the right strategy, but you don't really know how to implement it, and you fail at that. That's my opinion.
And why could you actually fail with execution? What are some of the things you need to take into consideration for a successful strategy to be executed?
First, I would make sure that the strategy actually fits the core activities of the company. And after that, I would check if I have the right management team to implement it. Mm-hmm. Those will be my two choices, I believe.
Okay. Anybody else? Can you recall elements such as change? What happens if we don't take into consideration potential change? We don't take into consideration what's actually happening in the environment. What happens to our strategy then?
You have to think on long-term issues, because if you don't, the strategy fails. It's like tactics instead of strategy.
Very good. What happens to resource allocation? What tends to happen with companies and resource allocation when we're implementing strategies? Do we dilute resources many times? Do we try and feed short-term priorities rather than actually looking at how we need to allocate resources eventually to really support the implementation of the long-term strategy? Think about other elements. What other elements need to be in place? Who actually implements the strategy in the company? Is it one person? So who implements the strategy? Don't be shy just because they're looking at you. You're either asleep or you're shy today, because you're very talkative normally. The whole company. The whole company. So what do you need to take into consideration?
Everybody has to know the strategy of the company.
Okay.
They have to look to a long-term strategy to finally get to the point.
And what happens if people don't know what the strategy is?
If the people of the company don't know the strategy of the company, it's not going to be successful.
Okay. Can you remember some of the statistics we saw in the video last week, where they talked about how 90% of successfully formulated strategies actually fail, and how managers spend less than 1 hour a month talking about strategic issues. Okay? How much do you think typically company associates actually understand their strategy and go to work every day and know when to say, okay, I'm going to do this or I'm not going to do this because it doesn't fit my strategy and my long-term objective? And remember, it's very, very important to know what not to do as much as it is to know what to do. So what other elements actually beyond associate engagement and commitment do we need to actually take into consideration to make sure that our strategy doesn't fail? Others?
The communication, maybe?
Okay.
I remember that video said that communication was very important, that when they got to interview a few employees, they didn't know that what was the strategy of the company, so they at the end they aren't aligned with the objectives of the company, and the strategy doesn't work.
Exactly. Can you remember when we discussed what actually starts to happen when a company's financials are not going well in the short term? What do companies tend to do? Especially, I mean, big companies have like sales projections and objectives they need to meet. So imagine next quarter, I'm not meeting my target. What does a company tend to do?
They try to do short-term strategies just to focus on that specific short target, which is not in the focus on the long-term strategy, which is going to suppose a fail for the company.
And what does it do? It actually changes direction.
Yes.
Okay, and it dilutes resources.
Mm-hmm.
No?
Yes.
Okay. When companies actually have to think about different opportunities, they need to always think about how those opportunities typically align with what they're really aiming to do for the long term. So the two concepts of deciding where you want to play and how you're going to actually win in that space. And there's two major things that you need to always keep in mind so that strategies actually don't fail, even if they're really well formulated. One of the key elements is it needs to be adapted to execution, so intrinsically intertwined with execution and intrinsically intertwined with change. So only those strategies that are truly intertwined with change are those that are actually going to survive, especially in the very dynamic world in which we live in today, in which things are changing every day. So when you're actually doing your pested analysis, when you're doing your strategic SWOT, you need to put in different elements of agility, of flexibility, of resilience to ensure that your strategy won't fail in the most important phase, which is actually execution. Okay? So I'm now going to switch gears, and we're now going to do something completely different, which is what I called creating shared value. I just briefly mentioned it last week. Can someone remember what it was about? No? Yeah? Yeah.
Corporate responsibility, something related with philanthropy and creating value of the company to the shareholders and of the community.
Hopefully what I'll be able, that's very, very good. Hopefully what I'll be able to persuade you today is that it really will lie at the core of a company's competitiveness in the future. And that only by creating shared value will companies really be able to derive sustainable competitive advantage. And what I'm going to do to start off with is actually put a TED Talk from Michael Porter. Michael Porter is the one who really developed this concept. Michael Porter is the guru and the father of strategy. And this is basically a result of all of the work he's conducted in strategy and a lot of the conclusions. This is pretty new. It was actually issued in 2011 in a Harvard Business Review article. But hopefully, again, you get to be exposed to the concept first from the guru, and then I will try my best to take you through what this actually is. To me, it's a very, very potent, very, very strong, very robust concept if you really think about society and you think of the role of business in society. Hopefully, we will get the opportunity after the break when you really discuss this in the context of your projects to give me your perspective. You're young and you still have a lot to do in the world, regardless of wherever you end up. So to me, hopefully, that I will actually be able to persuade you to really think about this concept wherever you end up. So what are your first thoughts? Sorry.
Maybe it's a bit generalistic, the idea of social business, or to make business a bit more social aware. But I feel also that it's complicated to do all that process and to, I guess Michael Porter is talking about sustainability also.
It's really talking about the way, remember we talked about the value chain.
Yeah.
And about how you create value. You derive competitive advantage by reconfiguring the different activities. You remember you did this for your own project. You looked at primary activities, you looked at secondary activities. You then looked at different ways to develop your strategic SWOT. Michael Porter says that the way to derive most competitive advantage in the long run as a company is if you take into consideration social problems. So you're not doing it because you're good and you really think about, like the concept of corporate social responsibility, where everyone was pointing their fingers at companies and saying, you're bad and you're basically creating problems and you're making money because of us, and therefore you need to give back some of the money to society, and that's what they did. This is it's a step up. It basically talks about that if you do not do that, you'll continue to to compete in the red oceans. You'll continue to compete, on product features and attributes, on price erosions, on price wars. So the only way to actually really become a great company and be able to really derive competitive advantage in future is if you actually address this tension and you really develop a business model that enables you to address unmet societal needs. We're going to cover this in much more detail so you understand the intrinsic elements of how you would do this. And there's 3 ways. They talk about in the video 3 levels, and you'll actually get to see it. So one is really reconceiving products and services. So when you start developing products and services, you take into consideration what those societal needs are. And again, this is something I've also been telling you for the entire module, which is critical. The more customer-centric you are in your R&D, in your innovation, in your value proposition, the more successful you're going to be. Because remember, one of the days I actually asked you if you preferred red or green, or I think we had to change to blue and green in terms of colors. And again, different people actually preferred blue for different reasons. If you do not segment, if you truly don't understand the intrinsic reasons that drive customer behavior, it's going to be very difficult for any of your value propositions to resonate. And the more you take into consideration customer needs, not only as individuals, but as a society, because all of us live in a society and all of us have problems. So the more you consider that, the more likely it is you're going to be able to derive that competitive, sustainable advantage, which is what strategy is all about. That, remember, you're developing strategies to grow and to be profitable. Okay, but your comment is typically, I think you're in the majority of, and this is very new, but I am convinced myself that this is the way forward. Because if not, we're going to deplete our entire world. I mean, it's not the way we're operating right now, in my mind, is not sustainable either. And by the way, this theory is equally important or equally relevant to the developed world as it is to the developing. It's much easier to understand this in African countries where I guess societal needs are more apparent, but the same needs actually exist in our society today. in Spain, in Japan, in Australia, in the United States, etc. Other thoughts? Are you surprised? Are you shocked? Are you cynical? Is this new? Had you ever heard about this? Okay.
We are studying sustainability here in the master. So Lida, the teacher, is talking a lot about this issue.
In the context also of strategy and how, because what I'm going to actually challenge you to think about is that creating, that shared value strategies should be the type of strategy you should really incorporate even into your project, and you'll get a chance to even think about that at the end of the class. So we all of the same elements that we talked about in terms of strategy, in terms of formulation and execution apply. However, your starting point changes, because your starting point is to really consider what those unmet societal needs that are related to the space in which you're wanting to play in. Okay? More thoughts?
Well, I have to say that I'm a huge fan of Michael Porter, but yet I have to say what my friend said here is too general. And I believe if we are in a capitalism economy, we have to say that it means that as much profit as you get is better. So as long as non-social activities creates more benefit than the social one, this won't make a change. It will make an impact. So I would like to see the real actions to actually be better to invest in social than non-social. And the example is, for example, the kids working in fabrics and stuff, that actually the cost is so lower than the profit is higher. So how can we compensate in this example, for example, this social thinking way of going?
You hit the nail on the head, and he actually just touched upon it briefly with the pollution. But when we really look at the three ways in which you can derive share value, you will understand it's actually more profitable to actually change the way you operate. It may be more profitable to bring your production even closer to home than actually having those kids working in China. And in fact, many companies are actually seeing this. How many of you know Nespresso? Okay. Well, Nespresso is basically one of the key highlights of how this is really being created. And you'll see how it's actually being created. Instead of buying coffee from the cheapest manufacturer, whatever, they're actually going ahead and have established a shared value strategy. Their strategy is really based on shared value, and we'll go into basically the key elements of what they're doing and how they have reconfigured their value chain on the basis of meeting unmet societal needs. So actually that's the thing. Your philosophy is the philosophy of 99, not 99 now, but maybe 95 or 90% of business, where they think it's more expensive to meet societal needs, when in fact it ends up being cheaper. How many of you have had mothers that have told you basically that whatever seems apparently cheap ends up being much more expensive in the end? Okay. Well, this is exactly the case. And his entire rationale now is on the basis of millions and millions of, studies and research where he has actually come to this conclusion. His exposure to social issues has enabled him to really analyze this carefully and really understand how by reconfiguring your value chain to really take into account these things, it ends up being more cost effective for companies to take into account unmet societal needs. And we'll talk about very concrete examples so you actually see how that actually can be done. But again, it's good because this cynicism initially is what is for doing. So only by showcasing examples of big companies that are actually doing this and doing this really, really well, can we really change the needle. Sorry. Oh.
Relating to the example you have chosen, Nespresso, and in addition to other one that's organic oranges, for example, both of them are more sustainable options of living, and they provide a shared more value, but perhaps we don't have to think in only in money terms. So if I buy Nespresso, I'm paying more for that coffee, and if I'm buying an organic orange, I'm paying more for that orange, but I'm having a better health. So perhaps this way of thinking is not focused on earning more money, but having a better life. So I think it's very difficult to compete. Competition between organic oranges and industrial oranges is, I think it's not possible. The price is different. So people taking into consideration other facts, not only price. So what I want to say finally is that sustainability or shared value could be thought in not only in terms of money, but in terms of people development. So.
Absolutely. But what this theory tries to tell business is that some businesses care more about society. Those that do not care, to his point earlier, he basically said, okay, as long as things that are not good for society remain more profitable, cynically speaking, that's what business is here to do, to grow profitably as much as possible, because businesses have shareholders. So what this theory tries to tell you is that, of course, you should care about, ethically, you should really care about your communities. But regardless, what it's trying to tell you, to your example with organic oranges, is you'll continue to compete in the same segment of organic oranges. However, if you do that with a shared value concept in mind, if how you structure your value chain to compete in that segment, if how you conceive your products, how you develop different partnerships with the people who also have a stake in your organic orange business, you will be more successful, more profitable than if you do not. Okay? Because every business operates in a community. How many times have you heard about businesses that get funding from the state, from a region, to be able to establish themselves, and how they've helped the tissue in the community, because a lot of people who work in that surrounding, live in that surrounding, in that community. So apart from an employee, they're also a citizen. So the more you can actually strengthen that tissue, that community, the stronger your business is going to be, because those people are going to be more loyal, they're going to be more productive, and at the end of the day, that has an impact on your entire business model. Okay, but we'll see it more clearly now when we go in through the different details. One last comment? Anyone?
I have a question.
Yeah.
So you talk about the integration of the community in the business. Strictly.
You do not integrate the community, but the community has needs, and you can potentially take those community needs into consideration when you take business decisions, when you develop strategies. So as an example, you could actually have, let's say, if you understand that you have a manufacturing plant, and most of the companies that you're going to be working in will have, we spoke about strategies to go internationalize, and those strategies had to do with producing cheaper in a different community, in a different country. A lot of these people live in communities. If you can actually develop activities that are going to really strengthen that, you're going to actually embed those people into your company. So it's not that you're integrating the community into your company, you're just taking into account and implementing activities that are going to help that community, so that whatever you do in that location becomes better. So for example, you could establish an activity that would help them with housing, as an example, okay? If you look at the short-term benefits, say, oh no, that's going to cost me $100,000. I look at the short-term benefit, no, the profit and loss just doesn't make sense. However, if you look at long-term and you really consider how that is going to impact your long-term objective, that's going to be much more cost-effective, and you're going to be able to derive much more competitive advantage by taking that into consideration. Okay.
Because I had a doubt about the difference between the loyalty of your employees and the loyalty of the community.
But those employees live in a community.
Yes, but sometimes those employees are more high value from the business, or they are more sometimes the business do not care about community but care about their employees is what I mean.
Of course, but those you'll see through the different elements. I'm not saying you have to do it always. It's just one of the mechanisms to create shared value if you do take into consideration the community. And in fact, all big oil companies that are now in different countries are having to take into consideration the communities, because well, they are being seen right now as companies that come basically destroy the place where they're at, and that is causing them problems from all types of on all types of levels. So if they are seen as really embedding and trying to do something for communities, not from a corporate social responsibility standpoint, not giving them just money and saying, okay, leave me alone, but from a perspective of, again, either reconceiving services that can help those communities, or by basically, again, doing things there that can help their value chain become more competitive, or by developing clusters in the community that can support the implementation of that business. If you have people aligned with you, you're going to be able to implement that. Just think of it from a regulatory standpoint. If you really develop clusters around you in Spain, in the UK, wherever it is, it's going to be much easier for you to derive and develop regulations that are going to favor the implementation of your strategy and the rollout of your products and services in that community. If you do not have that, it's going to take you longer, or you may actually even fail. Yeah?
You will have to pay taxes.
As well as, yeah.
I think that nowadays companies don't have any excuse for not implementing this model, but years ago they have the excuse that they didn't have the technology as we have now. That technology, which is environmentally aware and cheapest and so much more cost efficient, wasn't this available years ago. So that's why maybe production would be much more expensive when focusing on environmental issues and that they couldn't face. But nowadays that technology is there in the market and it's pretty cheap, so they don't have any excuse. And now focusing on social responsibility is very important for them because the market has changed. Now the client is society, and they have to focus on the client because the client is now who has the power to decide where to choose to buy their product or not. So that's why they also should focus on society as well.
Very good. What you need to keep in mind, and hopefully you will remember, is that shared value means that the unmet societal need is at the core of your strategy. You do not develop a strategy independently and then say, okay, how can I really neutralize this so that people don't give me any problems? And that's what the majority of businesses are still doing. They still don't understand that if the unmet societal need is at the core of what they do, and they reconfigure everything else on the basis of that, that's where they're really going to be more profitable in the end. It's a huge leap, because how many of you say you have a sustainability class. How many of you have ever thought that green strategies are more expensive? Okay. And initially they are. So when you look at the initial investments, it costs more. Same as organic food. It costs more. However, if you really look at the implications and the impact long term, and that's the other important thing about shared value strategies, is they make sense long term. They may not make sense for the next 6 months, but they make sense long term. And in order to address unmet societal needs, it takes time. It's the same as when you're developing a market. It takes time. Okay? So if we dive straight into some of the concepts, again, shared value is gaining significant momentum, and Michael Porter obviously is seen as the father of strategy. So founded a company called Monitor Company, which was a niche, really good, very well thought of strategic consulting company. So he's known a lot about strategy. And when he issued this article on the basis of his research in Harvard Business Review in 2011, this of course caught the attention of many, many people. And it's becoming a trend that is actually being discussed. And those companies that are successfully pursuing shared value strategies are now very much looked upon, admired, and respected, especially in a society such as the United States. It spoke the language of business, so irrespective of philanthropy or corporate social responsibility, which are typically initiatives that are inside the company, they're basically a different unit altogether. So they're not typically even supporting what the business is doing. However, this transitions to a situation in which it becomes part of the entire company. Yeah. And the companies that had had success with this, companies such as Nespresso, such as Cisco, a lot of pharmaceutical companies, had a way to describe it, had a way to say, okay, I can tell you, I can be a testimonial, I can write up a case study, I can actually attest to the fact that this is true, that I have actually derived a lot more competitive advantage and I am much more profitable since I actually started thinking this way. So it's not about, 1 point market share here and there. It's not about $5,000 more next quarter. It's again a long-term thought process in which I determine where I want to actually be positioned in the long term. I actually want to be a company that is deriving that profit for a long time. And of course, this linked a little bit what the company was doing in terms of corporate social responsibility with what it really, with what the company really is about. The company is there to make money, except for if you're in, obviously, an NGO or in government. It's very relevant because of the reasons Michael Putter already alluded to, because society is much more aware that there are a lot of problems. And these problems, by the way, cause issues to the natural development and implementation of business strategies. Problems such as aging society. What does that mean to all of us? Especially to people like you who are going to start working and you're going to actually have to be funding through your taxes. You're going to be funding all of this population that is over 65. I learned yesterday that 20% of Spanish population today is over 65. Out of that percentage, 30% of those people either are illiterate, you know what illiterate means? Okay? Or they've not completed school. So you can imagine how much Spain has progressed in that interim. And in the context of healthcare, of course, which is where I actually work, they were talking about social media and about internet and about how the evolution of healthcare and medicine. How do you address, if you're actually trying to develop very sophisticated technologies to reach the population and educate them, how do you educate that 30% of the 20% that is over 65 that is either illiterate or has not completed their studies? And by the way, is a population that is immobile, that typically has issues with mobility and has typically many different illnesses at the same time. You can say, oh, I really don't care. But if businesses that are in that sector long term, because this is only going to grow worse, aging society is only going to grow worse because Spanish people have few children, so this problem is not going to go away. Those businesses that really understand this and really try to develop products and services that address that in the future are the ones who are going to succeed. Those who do not will end up dying because they won't have a space. Yeah. The same goes with climate change, food security, which again, we think of, that's a problem of Africa or countries in Latin America or Asia. Water scarcity, by the way, this is a big issue even in the United States. In many states, many times, they actually have to turn off their water or they're actually left hours without water because of water scarcity. Urbanization, labor shortages. Labor shortages is a huge issue even in the case of, for example, the UK. They have issues even with not having enough nurses, so they actually have to bring in different nurses from different countries, including Spain. Okay, so this is not only a problem of, again, faraway countries, rural poverty, population growth. So as society becomes much more aware of these problems, we also understand that companies, as Porter also mentioned, is still immersed in an outdated approach as to how to create value, which is what we've been looking at and what you've been looking at for your own projects during the course of this module. They continue to view it really, really narrowly, okay? Because they optimize, as I've told you all along, they tend to optimize short-term performance. And it's very difficult. I told you, it's very difficult to have that coexisting tension between what Wall Street, in the case of the US, or the stock market here, is expecting from you and pressuring you to do in the short term, and what you need to do to be able to be well positioned in the long term. So if you overlook the well-being of customers, if you deplete natural resources, etc., again, it's not sustainable in future. And for example, shifting activities to locations, this is something I just mentioned briefly. So the internationalization strategies, or your motivation to have a strategy to enter markets, internationally, many times was, okay, this costs less. That child labor in China situation. And they thought, okay, this is the most profitable, competitive way of making money, again, in the short term. What people are finding out now is that that's not necessarily the case. There are many implications to actually having that plant in China with that child labor. Many implications that, if you really factor them in, make that strategy more expensive and not sustainable. Okay, and the problem also is that government and society have viewed business, as Porter also mentioned, as the one who's actually causing the social problems. It's that they couldn't care less. They cause a social problem at the expense of wanting to get profit. And I can tell you, I've worked in both the public and the private sector, and now that's changing somewhat in terms of partnerships, but most of the problems that actually need to be solved can only be solved with good collaboration between both. However, it's very difficult. If you approach people in government and you're in the private sector, they look at you very suspiciously. You're only there to make money. You don't have the same objective as me. But the problem is, right now, one of the areas that is actually growing fastest in terms of jobs is an area called market development or market access. And why? Because companies are starting to understand, regardless of the sector they operate in, that they need to establish good institutional relations with the people in government or policymakers, because if not, they will not be able to develop the conditions to be successful from a business perspective. Or it will take them much longer, or they will be in a less competitive position than their peers. Where is it?
I want to understand why it's more expensive for companies, for example, that child labor. It's more expensive because nowadays maybe there are laws that they have to pay because of that, or for example,
in some cases it's because it ends up being cheaper to have the manufacturing location closer because of all the implications with transportation. Because you have issues with those children basically not being able to sustain the effort or being as productive as naturally adults are. Or because you can actually find another way to automate that production rather than actually having it manually intensive. That again is more sustainable in time. Yeah. So there are different ways in which that could end up being more expensive. However, in the short run, it's much easier to just set up a manufacturing plant, put children, and not think about it anymore. The solutions that are more cost effective take time. So anything and the initial investment is more expensive, but in the long run it becomes more cost effective. Yeah. It's relevant also because there was a visible disconnect between business and society, which again, to Michael Porter's comments earlier on, how long can this go on for? How long is society going to put up with this? Okay, so there was a complete disconnect between company profitability and growth and between social and economic development. Okay, many companies adopted this narrow model of value creation, which I mentioned before, which again, what do you focus on? And we looked at this with a strategic choices model. Companies are more interested in meeting conventional needs of conventional customers. It's less risky. The benefit, the profit is more visible. They optimize within narrow company boundaries. They don't go to the blue oceans. Okay? They typically think about improving their profit how? By outsourcing, by globalizing. Okay? They think about it in the short term. They tend to want to drive revenue, again, through acquisitions. It's easier, it's faster. Why does a company acquire another instead of trying to develop the business themselves? Because it's faster. They get the profit faster. They show the signs to whatever stock market faster. And societal issues very rarely have ever been taken into consideration, except for when they were imposed. So companies such as Merck, Glaxo, etc. How many of you are aware of what happened with the AIDS epidemic in Africa? You know what AIDS is? Okay. So of course, initially, the treatment for AIDS was antiretroviral therapy. Okay, you had to take a cocktail of drugs in order to survive. You had to take it the rest of your life in order to survive. Initially, those drugs cost a lot of money because, as you saw in the case for GSK last week, pharmaceutical companies actually spend a lot of money to try on R&D, and only in very few cases do they actually get blockbuster drugs they can derive profit from. So they cost a lot of money. And that was okay for countries such as the United States. For countries such as South Africa, where a big percentage of the population had this epidemic, that was not sustainable. So those companies were forced to reconceive their products and services or lower their prices because of the scrutiny there was at a worldwide level. So that was how companies thought about it before. The way companies are evolving to think about this is, if these are the needs in some of these markets, in the society in these markets, it's profitable for me to actually go after and address some of these needs, and then build my entire strategy on the basis of that. And I'll give you concrete examples in which I have actually been involved in, and I can tell you and attest to the fact that it is that way. So again, most companies remain stuck in the social responsibility mindset, in which, again, as I said before, societal issues are at the periphery. It's somebody else. So typically, it's somebody else in the company that is very philanthropic and really cares and does this activity, that activity, gives some money, and that's about it. Okay. What are some of the roots, again, of shared value? The fact that competitiveness of companies is based on the linkage and the intertwinedness of business and society. That makes a company much more competitive. Because a business needs a successful community. Why? Because they need that community to actually buy their products and services. And they need them to provide the assets and the environment in which they can conduct their business. Okay, that makes sense, yeah? And a community needs successful business. Why? Because they need the business to provide jobs and wealth so that they can also prosper. And again, back to the shift, and I'll be talking about this again and again so you really understand the change in mindset. The traditional focus of firms, which again is something you've been trying to do also through your projects, is to really persuade your customers to buy more and more of your products, okay? What is happening though? There's growing competition. We talked about the Me Too companies. So you're competing again in the red oceans. There's waves of restructuring. So if you do not do well, what we discussed last week, the company goes into survival mode. It ends up restructuring, and then forgets and forgoes the long-term strategy and then needs to operate that way for a period of time and then goes back to the table and says, okay, now what do I do now? They relocate to lower cost regions, and there's little true innovation and little true organic growth. Most companies don't grow, especially in developed world, don't grow at double-digit figures. To be truly successful, a company needs to create a distinctive value proposition, of course, that meets the needs of a chosen set of customers. That is clear, and that's what the strategy should be really based on. It gains competitive advantage by, again, how it configures the value chain. You yourselves did this with your own projects. You tried to understand what were those core activities that were really going to help you derive the advantage. Competitive strategies that are based on shared value will be much more sustainable because, again, you will break the cycle of imitation and zero-sum game which most businesses are in today. That is a true way of becoming much more credible with your customers as well as differentiated. The problem with companies is if they're truly focused on positioning and on that same red ocean, they forego societal needs. They're really not relevant. So they're not really conscious of how not addressing those societal needs can actually harm, in the end, their value chains. How the way they are configuring their competitive advantage is not optimal. How have corporations evolved in their social engagement approaches? And again, this is very typical of how companies have actually really embraced this. They started off by saying it's really not a problem. I don't care, I ignore it, I minimize my responsibility, and I just give a little bit of money here and there just in terms of philanthropy. Then they transitioned to a situation in which they said, you know what, it is a problem, okay? So what did they do? They have public relations in the company, so when people criticize them in the newspapers, they can really defend themselves, yeah? So they increase a little bit of the pot of money that they're destining to philanthropy. And they start trying to engage stakeholders. From that, we're in a situation in which they say, okay, maybe we should consider solving the problem. You know, it adds cost to fix the problem. Of course, it's going to cost me money. I don't like it very much, but I guess I have to do it. Again, it's the have to do it. I report transparently on our results, and I try to leverage some of the corporate assets to be able to try and fix that problem. And now the big shift in how businesses are going to engage socially is to say, okay, I recognize it's a problem, I recognize I need to solve it, but more than anything, it's actually an opportunity, okay? I need to build social issues into my model, into my strategy, so that I can actually lower costs at the end of the day, so that I can actually grow revenues, and guess what? So that I can differentiate our value proposition. And those companies who can actually incorporate those social needs are intrinsically those who will be more successfully at doing those three things. So at the end of the day, they'll derive more competitive advantage, and they'll be leading the market. So what is shared value? Okay, shared value is a management strategy. It's a strategy, okay, which focuses on companies creating measurable business value by identifying and addressing social problems that intersect with their business. They're not going to solve any social problem. So if you're in one sector, again, if you have decided with your corporate strategy where you want to play, in that space, you need to determine, okay, what are the biggest unmet societal needs that I can actually have an impact on? And then I reconfigure how I win on the basis of addressing that need. So rather than looking at individual customer or individual needs, you look at them from a societal perspective, because those societal problems have an impact on a big percentage of the population. It's really a framework that creates new opportunities for all of the actors in society that have an impact on business, have an impact on the implementation of our strategies. It really defines a new role for business that goes beyond corporate social responsibility and goes beyond the concept that business is just here to make money, which again, no one really likes. Even you as consumer, it aggravates you when you think you think a company is overcharging you. There are very few instances when you are really brand loyal and you like paying a lot of money because you like what you're getting. But in many different instances, it actually aggravates you when Telefonica charges you 30 euros more a month for something that you don't understand. So if businesses reconceive their notion, their role in society, and society understands where business is coming from and what it's trying to do, then it just basically sets a much more harmonious dynamic within the environment in which businesses implement their strategy. And let me see. This is yeah. Sorry, you have. Yeah.
I have a thought about the last slide. So it's not an integration; it's a recreation of a. You have to create a new business around your.
No, that's how the people think. Ideally, everything you do should have unmet societal needs at the core. If as businesses transition to this mentality and to developing strategies that are shared value strategies, that's not going to be possible because they're already competing. They have business units that are not necessarily focused on creating shared value. However, in principle, as you move along and as businesses progress, anything they do should have addressing unmet societal needs at the core. That's the big difference from corporate social responsibility, which is a different division within the company.
Okay, but you talk about Telefonica,
yeah.
Who I don't know, earns 30 euros more,
Yeah.
and you don't know why.
Yeah.
There is a process, there is a business strategy, operation, too many factors under that number, under that 30 euros number.
Absolutely, exactly.
So they will have to change not only that 30 euros number, so their workers, their operation under the number.
No, because they can do it, and again, we'll look at it. There's three ways they could do. They could reconceive products and services whereby they could make an offer of a contract to you that would not have those 30 euros in exchange for something else. They could reconfigure the way they deliver the services to you in their value chain so that they could diminish those costs and you could actually perceive the difference. And again, depending on what they're really trying to address, the fact that you want to speak to your mother is not an unmet societal need. Okay, it's your your need, but it's not an unmet societal need. Okay, the unmet societal needs are much broader in scope. Okay, this is a concrete example, and again, how many of you have heard of a concept called fair trade? Okay, so typically with coffee beans in Côte d'Ivoire, and this is a very concrete example, fair trade had, in a concept of fair trade, they thought farmers could increase their income by 10 to 20%. What has been demonstrated now that companies, including Nespresso, who have managed to create shared value strategies and implement them, have managed to increment their incomes by over 300%. What do you think that does to those farmers? What do you think that does? If you actually implement a strategy that helps them increase their profit from 20 to 300%. Everyone wins. And they are at the core of Nespresso's success. Having good coffee beans that are and a reliable supply of coffee beans is in Nespresso's interest. If their suppliers are happy, they're happy. Yeah? So that's the big difference. Fair trade is just like, okay, I'm doing this because I have to do this. Shared value is, okay, I understand that if I do this, this will make me more profitable. It'll make me more competitive. And it will be sustainable. What is different between, very concretely, CSR and shared value? And by the way, CSR is increasingly important also in companies. So I'd say most of the companies, especially big companies, there is CSR ongoing. So the motivation is what in CSR? Company reputation. Again, they're forced to do it because people are pointing fingers at them. Whereas in shared value, it's competitive advantage. So this is completely linked to what we've been talking about in terms of strategy all along. It's the most competitive strategy you can actually have. In terms of traditional CSR, who are the main driver? External stakeholders that are actually putting pressure on the company to do something. Whereas in the shared value, it's corporate strategy. That's what's really driving shared value. The approach in CSR is reactive. People point fingers at you, criticize you, so you think you need to do something about it. Whereas in shared value, it's proactive. You actually have a strategic discussion and you understand that you need to address unmet societal needs in order to be competitive. How do you measure? You measure it by standard metrics in CSR. Okay, I give this and then that's it. Whereas in shared value, you measure it by the impact you actually have from a societal standpoint as well as an economic standpoint. So this concept of societal and economic value creation is at the core of shared value. Okay? You're not only making profits for yourself, but you're also creating societal value. In traditional CSR, who manages this? Just a separate unit, which is the corporate social responsibility unit. And typically there are not that many people, and typically they're not very well regarded. Okay? In the case of shared value, it's up to the entire company. It suddenly becomes the company's strategy. So it's managed by everyone. Business benefit, again, it's risk reduction and goodwill. So, okay, I want to neutralize the fact that people can actually start causing problems for me. Whereas in the case of shared value, it's about new business opportunities. It's about growing. And in terms of social benefit, of course, you can have successful projects. Okay, you're seen as, oh, so-and-so sponsored this activity and this has actually meant that 10 children have gotten, let's say, chemotherapy treatments for 2 years. Okay. In the case of shared value, it's large-scale sustainable change in the society and in the company. So what are the different levels? How can you create value? So very concretely, you're talking about, we've talked about a very generic concept. So concretely, what are the different ways in which a company, if they start now and you're going to do this with your project after the break, how do you go about this? How can you actually do this? The first way is to reconceive products and services. To actually think about in your portfolio, how can I actually develop new solutions that address those unmet societal needs, okay? And I'll give you it talks about BD's example for safety in the United States, but I'll give you a very concrete example of when I actually worked in the developing world in immunization, in vaccination, okay? This was in the midst and at the height of the AIDS pandemic. And they suddenly realized that one of the ways that up to 50% of transmission of AIDS happened not through heterosexual sex, but it actually happened by reusing syringes and needles. So in contexts in which, healthcare workers do not have enough supply, they wash them, again, out of ignorance. They weren't bad. They had to decide, either I vaccinate a child and I risk it because I have no other syringe and needle, or I do not vaccinate the child because, of course, I don't have the supply, but the child can die of the disease. So it was a very big dilemma that these people were facing. There were no products and services, of course, because in the developed world, we don't have that problem. We have ample supply, so a nurse does not need to decide, or a doctor, if they wash the syringe and needle. If they do it, then that's their problem, but that's not an issue. So what we did is we actually did two things. We developed a cluster. as a big syringe manufacturer, we got together with people who understood the unmet societal need, the unmet need in the vaccination arena in the developing world. We understood what the major issues were, the key elements, etc. And we developed a new product altogether that was not going to be used in the developed world, because that's the other problem. You only typically look at this very narrowly. You have space for manufacturing, and you want to dedicate it to those products that are more profitable. Not necessarily, again, another dilemma to your point earlier with why should I address a societal need if I could be more profitable doing something else. And we dedicated that space to a manufacturing plant and developed a syringe that once you used it, it locked, so they could not use it again. So you did not leave that decision in the hands of the healthcare worker. Initially, to bring that idea within my company, they were doing it, okay, we'll just do this, again, because if not, people are going to point fingers at us. In fact, that has been one of the most profitable businesses now in the context of the company. Why? Because this then starts to have an impact on many other different streams, because you start working with other agencies. Those agencies then have an impact on decisions that happen otherwise. We use the same manufacturing plant for those syringes as many other things. So guess what? In our value chain, we lowered manufacturing costs. We derived benefits that really have had an impact everywhere else. Okay, and that's just one example of reconceiving products and services. The same happened, by the way, with safety syringes now in Europe and in the US and now across the board, where they have mechanisms so that healthcare workers do not get a needle stick injury and they do not contract a disease when they're doing their work on a daily basis. And the same thing happened initially, like why should we be spending our money on this? And then at the end of the day, it's the biggest, it's what's really driving the growth of our company now today in one of the business segments. Okay? So an ongoing exploration of societal needs will help you. By the way, it helps you innovate, because it helps you really uncover potential opportunities in which you can actually differentiate. It gives you ideas. Okay? And it helps you reposition yourself in markets and recognize potential opportunities in segments you had completely overlooked initially. So that's the first way, okay, to reconceive products and services. So if you really look at the space in which you're operating in your project, think about what are the true needs from a societal standpoint, and have I thought of other products and services I could actually offer that would truly meet those needs? Because guess what? Those needs tend to be very ample. So guess what? Your success tends to be much longer term, because you're not satisfying just a short-term need. You're satisfying a long-term need. The second way is by redefining productivity in the value chain. And this really has to do with decisions on where you locate your manufacturing, on procurement, who you procure and how you procure from, natural resources. Again, initially when you put in, companies thought about investing in technologies that would reduce energy consumption, those cost money. So a lot of companies say, oh, we'll continue the way we are. We're polluting, but we don't care. It's cheaper. Because if I have to incorporate these investments in this year's budget, guess what? It's not going to look good. So I'll just forego the long term. Whereas those companies that have really invested in energy reduction technologies, as an example, that's reconfiguring your value chain, have really been much more successful and productive and profitable in the course. Again, but these decisions and these investments are for the long run. You do not invest in something and expect to reap benefits in the first 3 weeks. Okay? A company's value chain is affected by and affects the society in which it basically operates. So things like, as I mentioned before, natural resources and water. For most products and services, you need natural resources and water, health and safety, working conditions, equal treatment in the workplace. So things, for example, like, again, as I mentioned before, you said manual labor in China, they may actually realize that they can implement solutions that have to do with natural resources and energy in another part of the world and pay adults. And at the end of the day, it will end up being more productive if they reconfigure their value chains. Okay? So I'll give you 3 examples here. Packaging, by the way, is another huge example. Okay? A lot of companies that are following green strategies are thinking about plastic and how they can reduce the use of plastic because of the impact this has on the environment. So by reducing packaging and improving delivery logistics, Walmart, all of you know what Walmart is, the biggest retailer in the world probably, saved $200 million in distribution costs, even if they were increasing the quantities they were shipping. Okay. Coca-Cola, again, this is very, very pertinent to them, reduced their water consumption by 9% to its goal of a 20% reduction by 2012, and that has had a huge impact on the profits they're actually deriving. And Nespresso, again, is another example of how it's reconfigured its value chain and how it's become, what it's done is actually try to really foster local production wherever it was, really strengthen local producers and their communities, instead of what does normally a company such as Nespresso want to do? They want to centralize. They want to buy everything from the same company, and they're just interested in that. Or maybe a couple, 3. But it doesn't seem intuitively very cost effective to actually have to deal with different producers in different locations. And that's why you have all of these flavors that come from all over the world, by the way. And yet they've been able to derive 30% growth since 2000. They're growing much, much faster than traditional coffee makers. And these coffee makers, of course, have not reconfigured their value chain and have not taken into account shared value strategies. They have not really considered how they could meet and address societal needs around them. They've established partnerships, which you will see now, with even NGOs to be able to pursue the same with those employees that were actually developing and manufacturing the coffee they were going to use. And the third way, so the first one is reconceiving your products and services. The second one is redefining your value chain, okay, to take into account societal needs such as climate change, such as the depletion of natural resources. And the third way is to build clusters and framework conditions, okay? You need to build relationships with key stakeholders that also have a stake in meeting those unmet societal needs. Okay? You can actually do this and really reach your objective much faster. Here you have the case of Nespresso, who also built, so apart from reconfiguring its value chain, it also built clusters around it. It built agricultural, technical, financial, and logistical firms and capabilities in each coffee region. If we go back to looking at strategies and you looked at, the multinational and the global strategy and what makes more sense, intuitively, that does not make sense. It costs money to do that. It would make much more sense to centralize that. But what did that do? It actually drove efficiency, even if it doesn't really make sense. Okay, if you think about having to manage 45 different locations, you don't think of efficiency. You think of other ways of being more efficient. And it drove high quality local production. Why? Because by strengthening the communities and the local producers, they actually made them much more loyal, much more productive, and they could control the quality of their coffee, which, by the way, is a core competency, is at the core of their value proposition in the coffee segment. It also worked, and again, this goes back to the cluster development, in partnership with the Rainforest Alliance, which is an NGO, to teach farmers more sustainable practices that make production volumes more reliable. Okay, so if you typically, again, and training and education costs money. So a lot of companies do not, they say, why bother? I'm just interested in them just taking the coffee beans and doing their job and that's it. Why should I actually be training them? Why should I be enhancing their skills? I don't care. It costs me money and time. However, if you really train and you upskill those workers, at the end, it will have a huge impact on your long-term competitive advantage and your long-term profit. And the same goes for Cisco. Johnson & Johnson, this is a very, another big example, invested a lot on health wellness programs. Do you know what a health wellness program is? So basically in their company, they spend a lot of money, not only on having gyms, but on paying nutrition, paying diets. I mean, initially that costs money. Why should I be paying if my employees are fat, why should I care? They realized that by upskilling the wellness of the employees that worked in the company, that would have a huge impact on their productivity, on their advantage long term. And they have derived the dependency and the relationship after X number of years implementing that. So initially, I'm sure the person who brought this to the table of their manager to say, I want to invest $5 million in implementing this wellness program across the company. We don't need this. Why? I don't see the direct impact this has on my business. I'd rather invest in something else. Because again, remember, companies have finite resources. They're not unlimited. So it's an opportunity cost to invest in this. Okay? And you have many, by the way, many examples of training education. In the case of Cisco, again, the call centers, how many call centers have now been, of course, located outside? Those companies that are truly developing the employees that work in those call centers, abroad, are the ones that are actually having much better service. And guess what? If you have much better service, you have more clients. Or you can charge more. Most companies take a portfolio approach with shared value as one component of their portfolio. So again, to your earlier point of having it just as one of the strategies. Not as everything that you do, but as just one potential strategy. So they look at two axes, social impact and business impact. For those companies that actually are not really looking at, they're looking at small business impact and small social impact, they look at this as community obligations. So they fund initiatives that just meet basic community expectations. For those companies that look at this with a small business impact but a high social impact, they're considered to be shared value enhancers. So what does this mean? They create an enabling environment that supports the growth of their company goals. Then you have those companies that really couldn't care less about society but really want to make a lot of money. And those are the ones that think business goes first. So they really only focus on the excellence of their core business. And then, of course, you have shared value initiatives. And those are the companies that are really thinking long-term on business impact, so high business impact and high social impact. Because they basically are deriving simultaneously social and economic value creation. So how do shared value companies think about how to really implement this concretely in their company? So they could do it three ways. Imagine they decide to reconceive products and services. What are the three things they need to have in place for this to really work? And again, this is the same as any strategy. So this is no different, okay? The thing is, though, that you're parting from a situation in which most companies have already ongoing business, so they need to change course, and this is the implication. So they need to have organizational commitment, okay? So they need to go beyond their prior mentality to one in which they need to understand that this is in their interest. They don't just do well by doing good. They need to connect their strategic objectives to the initiatives. So again, it's the same principle as strategy, as what we've been discussing in strategy. And they need to build an organizational culture in which the employees feel proud and committed and engaged to develop and implement shared value strategies. They need to have an enabling infrastructure, and they have to have passionate and capable leaders. So again, It's basically the same underlying elements for any successful strategy implementation. Which institutions, if I asked you, are 1, most responsible for, and 2, most capable of addressing social problems at scale? Answer. And think about, you have all of these institutions play a big role in solving problems in society. So you have government, you have NGOs, you have philanthropy, you have individuals such as Clinton. Clinton has a big foundation, so that's why he's there. You have communities and you have the private sector. So who do you think is most responsible for?
Government.
Okay.
Government. Because I believe that governments have a huge really good relationship with private sector. Also.
You think they have a very good relationship?
They have to have a good relationship.
No.
They have to.
But they don't, yeah. And who do you think is most capable of addressing social problems? Based on Porter's, not only on Porter, but you also have your own thoughts.
The private sector.
Okay, so you understand where each one has a role to play in addressing societal problems. And without the private sector, they will never get resolved. Okay. Anybody else have any thoughts on that? Or think differently?
I think all of them are responsible of the social problems, and all of them need to cope to solve them.
All of us are. All of us here. All of us are.
As all of those present there, which are part of the society which we belong to, are responsible for what is happening, and we need to cope to work it out.
To find solutions, absolutely. Very, very good. And finally, just so that you understand, just as a reminder, okay, Porter had this in his video as well, but just so you see the magnitude of economic activity, and he actually said that the way we were operating right now, where there's a scarcity of resources to address social problems, we can only have incremental progress, little by little. And guess what? We have huge issues occurring because that progress is just far too slow. If you look at the nonprofit output, it talks about 1.2, government spending 3.1, and look at corporate revenue. And that's just in the United States. In other countries, this looks actually much more daunting. So in the developing world, actually, government spending is even less, and so is nonprofit output. Okay? So what we're going to do now is I'm going to give you a bio break, and when you come back, again, this is very briefly, but so that you understand the concept and how that would apply to a very concrete case, which is the project you're working on. Identify all the potential societal needs, benefits, and harms that could be embodied in your firm's products and services. And think about how your company, if your project becomes a company, can create shared value by either reconceiving products and services. Think about whether you would think about what you have to offer differently. Whether you could redefine your productivity in the value chain. So all of the decisions you were thinking about in terms of internationalizing or integrating vertically, can you actually redefine that in your value chain? And how would that be related to potential shared value strategy? Or how could you build clusters and framework conditions to enable shared value strategies with your project? Okay? Any questions? No? Okay, so if you need to be back here by 10:02. And then once you start, you'll have 20 minutes to discuss this. It's again just so that you understand the concepts and we make sure you know how to apply them. And then I'll have one group come here and just briefly tell us what their thoughts have been. Okay?